All right, let's continue with our market coverage at this hour. Michelle Schneider is Managing Director of Market Gauge Group, and she joins us to talk a little bit more about the mood of the markets. Mish, as we head into the weekend here, we started this hour talking about the fact that this inflation story, the central bank, higher interest rates, this is going to bleed into next week as we get ready for the next Fed decision, and investors are selling now, asking questions later. What do you make of what's been going on?
Well, yeah, there's certainly a lot of fear, and clearly what happened with FedEx and the CEO coming out and saying we're heading for a worldwide recession is not going to help those fears. But what's so interesting right now is there is a huge debate still on whether or not we are in an inflationary period or a disinflationary period or recession. And so if you just kind of look and see what's going on here, going back on the charts, by the way, ironically, FedEx started in 1973 after the oil embargo when we went into that deep recession. So I just kind of think it's kind of interesting that here we are in 2022 and they're having some difficulties. But basically the lesson is this. A lot of the pent-up demand that these companies thought would happen after COVID obviously is still not necessarily happening because of the higher interest rates. And here we are now at a very pivotal point for the Federal Reserve. And I think you and I, John, have talked about this, how difficult their decision is, because if they ease up on the helm a little bit on the rates, they can spark inflation. We're still seeing high food prices in particular. And if they get too aggressive, then the market will go the way of FedEx and just really have a hard time. So I think next week will be key. I hate to say one Fed meeting is the be-all, end-all meeting, but if they do not only the 75 basis points, which is expected, but anything unexpected, that will have an impact. And it's going to be what they say going forward. Where is their concern now? Are they still inflation, and not caring about recession, Volcker-esque? Or are they going to say, maybe, we need to kind of ease up a little bit?
And obviously the challenge for them or any central bank when you want to have a united front and a key message is that some of these moves are going to take an awful long time to work through the system and subsequently tell us, whether we're in a recession, whether it's a deep recession. So that's a complicated story for investors. But, you mentioned FedEx, and here's a company that is sending the world a cautionary message. But even some of the people who cover the company said, well, hold on, there could be some very specific issues to FedEx that factor in here. I mean, UPS on some levels has arguably managed things differently. And we even had a conversation this week with the head strategist from Bloomberg Intelligence about, sure, profit pressure, that is something that you have to prepare for in recessionary times. But are we going to see the same kind of profit deterioration that we saw during the Great Recession after the internet bubble burst? Because historically, you go back decades and decades, you've got much more reasonable declines in profits, and you're already seeing a lot of companies that are moving quickly to try to protect that bottom line performance.
Well, yeah, okay, there's a lot of points there. Well, first of all, yes, I think that's a very astute observation about FedEx, because we know that things get left behind. I mean, that's just the natural order of things, and Amazon is a big part of that, doing their own deliveries. And who knows where we're going to go. If we're going to go more digitally based, electric cars, self-delivery cars, drones even. So FedEx isn't going to keep up. I do believe that they also had some inherent problems. In terms of this the PE and where companies are going and comparing it to a dot-com bubble, I still think that if we look back in history a little bit here, we can still establish a trading range and get through these lower numbers in recession. Again, really, if the Fed doesn't bumble up their next monetary policy and sort of keep things maybe here around the 3.25-3.5% Fed funds rate and not go too crazy. So a lot of these companies that have been buying back their own stocks, living on zero interest rates and paying very little corporate taxes, are getting a big bite of reality. But maybe ultimately that could be beneficial, not just for investors to buy something more fair value, but even the consumers, as some of these elevated costs will have to eventually come down, even though we're still obviously worried about raw materials. But we're years away, I think, from really sorting all of this out as far as these raw materials go.
Yeah, no doubt.